when people look at multiples on revenue for a CPA practice selling at say 1.2 versus a wealth management that's closer to 2.5 or 3 times revenue, it may sound like, oh, that wealth management is selling for way more as a multiple. But when you peel back their EBITDA, the EBITDA is so much higher on that same amount of revenue in a wealth management than a CPA firm that those numbers actually are much closer. In fact, some of the CPA firms may sell for a higher EBITDA than wealth management.
All right. Welcome back to Inspired or Acquired. This is the podcast where we interview real business owners, get their real numbers, and ask them whether or not they would sell. We've got a great episode today with Craig Hausz coming to us out of Dallas. Craig, how are you?
Great. Good afternoon. Hope everybody's having a great Friday.
Yeah, it's a great Friday. We've got Clint Fiore, co-host as always, out of Texas as well. So we're excited to chat today. So Craig, if you don't mind, just tell us a little bit about your business and the services you provide and who your customers are.
Sure. We have a CPA firm, and we actually have a wealth management practice as well. It's 10 years old. My wife and I started it in 2014. The two of us were sharing an office, which was basically a file room closet in a financial advisor's office. And over the last 10 years, we've grown it to have 18 team members, some part-time, some full-time, some remote, some hybrid, some in the office. We focus primarily on working with high net worth clients that are business owners and or real estate private equity investors.
Well, Craig, this is Clint. I'm going to jump right in. The hook of this show is called Inspired or Acquired. And we're trying to quickly determine kind of the dollars and cents of your business, kind of what is it worth on the market value today. And a lot of times people haven't really considered that yet. And I'm gonna put on my devil's advocate hat and see if I can tempt you to consider selling. Once we walk through some of the high level numbers.
Okay.
And then I also kind of want to hear your growth trajectory. Because you've been doing some acquisitions, I've heard, and I want to hear a little bit about that. But first, I just want to jump right in to the dollars and cents. You've been doing this for 10 years. You do wealth management and CPA accounting work. How does that revenue split out for you?
Right now, it's approximately 90% of the revenue is on the CPA side. 10% is on the wealth management side. That number was 99-1 3 years ago. And it's slowly growing. I think an ideal spot for us, it would get to be, ideally, we'd rather have more revenue from the wealth management side than the CPA side long term. But realistically, 10% right now after 3 years, given the size, we have almost 3.9 million of total revenue. So we literally were within $3,000 of hitting 4 million last year. So in 23. And so for us, that's actually still decent growth, right? I mean, 350,000 of wealth management revenue added just through organic growth, mostly from CPA clients. We would consider a win. So yeah, I like it, but I'm hoping that number gets to 1 million by the end of 25.
Yeah, so we know this industry well. Patrick's got a CPA firm, of course. Some of my best friends are in this space. I know the margins. I know they can be really good if done correctly. If you're running the business well, 25-35% is kind of the range I typically see of a well-run CPA/wealth management firm. Are you falling somewhere in there on the margin?
Yeah, we're probably not at the top end, but closer to the top end than the bottom end when net.
What has your trend been the last 3 years? So like you did almost 4 million last year. Like, what's been your growth rate? Like, what's that looking like?
Well, it's been steep. Actually, we, effective on Tuesday. So by the time this gets aired, we'll be in the Inc. 5000 for this year. So
congrats.
That is awesome.
Yeah. And so, but
second time?
No, this is the first time in the Inc. We were regional in 22, and then we made the full list for 23. Honestly, part of it is because of an acquisition. We acquired a practice in 2022 that had 6 people and just over $1 million of revenue. So we've gone from the low 2 millions to, like I said, nearly 4 million this last year.
Very cool, man.
And we were 1.2 million in 2020.
Yeah.
But that's slowing down. We're actually going to be fairly flat this year, ironically, and it may sound silly, but at the same time, there's a point where it's kind of the accordion effect of growth. Sometimes you can add it and then you have to kind of peel back what's non-ideal out of it. So we still have some non-ideal revenue that frankly we're shaving off a little bit just to create a better experience for the clients and for our team. And then, as anybody in the accounting industry that dealt with this knows, the ERC money and PPP money from the COVID years has definitely buoyed a lot of revenue numbers for firms. And so, with moratorium and the filings going away, we're not doing those services anymore.
Yeah. So tell me this: do you and your wife own the company 100%, or do you have any partners?
100% at this point.
Okay. And you've done some acquisitions. I know you took on some debt to do those. Have you paid all those back, or you currently have some debt on the business?
Currently have some debt, primarily because the acquisition in 22 is, right around the 2-year mark at this point. So we technically have 3 more years to pay it off, but we're down to, I think, less than a year left of payments on it. We try to front load as much as possible. It's at a good rate. I mean, it's only 6% fixed. So we don't have a need to pay it off quickly, but at the same time, my wife is very debt averse. So she wants to pay that off. But all of our others, we've paid off. We've done 5-year loans with our bank each time, and we've paid them all off in less than 3 years.
Is the balance on that managed like a couple $100,000 or something, ballpark?
I think it's like 380 or something right now.
Okay.
On 1.3 million.
And your wife works full time with you?
Technically she's part-time-ish, but she's full-time with being able to play tennis and do all the other kids' activities and stuff she likes to do.
Craig, you're technically part-time too. Let's be
honest. I think
we've seen you on the golf course, bro.
Yeah. If you follow me on Twitter, you'll see I don't miss out on casual rounds of golf around the world.
Okay. I think I'm ready to ballpark you just from this conversation and what I know about this space. Like, I honestly think if you ran a process today and went to market, I think you could fetch in the neighborhood of $6 million for your company.
That'd be pretty good. Yeah.
And it sounds like, you'd be able to take home most of that since you're the sole owners and don't have much debt and it's a fairly liquid industry, like there's ready buyers all over the place that want these types.
Yeah.
That would compete to buy this thing. And then you could they're happy to retain you, so like if you wanted to work even less, golf even more and be able to make a sunset income or whatever, like you could kind of have your cake and eat it too in this industry, so keep you around as long as you want, but you get rid of all the headaches of operating the business and running and managing all the personnel and all the stuff of the lame stuff of business ownership that nobody likes. And you get to do the fun part you do like, which is hanging out with the clients and do that sort of thing. Is that starting to tempt you? Like when you think about that's possibly on the table.
I think the thing that it's the life cycle of the person as well. I've definitely had more conversations internally with it lately because there's now a 5 in front of my age. And, I hit that moment where I'm like, okay, so what does the rest of my life look like? Right. I had this, I'm not having a midlife crisis by any means, but it changes. Right. And I think 10 years from now, that number becomes more solid. Right. Given the fact that we can, even with almost no growth, maintain a fairly decent, that's roughly 5 to 6 years of cash flow. I'd have to replace that somehow. And so then you look at it from, okay, so if I put that money in my pocket and earn whatever I could earn, passively, what would that net to me? And then you got to factor in taxes too, unfortunately. Right. So, the net, it's not going to be, that much. It's probably closer to 4.
Mhm.
That's not quite enough for me to retire on. So yeah, I'd have to figure out a second life of income. And as Patrick's aware of, and you hear it all the time in the tax world, I mean, the PE groups are just showing up with bags of money right now. And it seems like every time I get somebody calling, I basically say, hey, if you show up with an 8-figure number, then I'm ready to talk. Right. And it sounds
Mhm.
silly. And I don't want that to sound arrogant by any means. But at the same time, there's a point where I'm like, hey, listen, if you're willing, everything has a price that the
Yeah.
owner's willing to step out. So I think it's more of a timing
Yeah.
issue of where is that owner in the life cycle of wanting to get out. Whereas if I was like, I need to retire, and and frankly, I got another huge benefit for our firm is I can look around and see future owners, in the office next to me, down the hall. I mean, they're around internally.
Yeah.
So I don't also have that, I'm not sitting there looking around going, okay, wait, who's showing up with money here? So we've got some options, which are nice.
Hey guys, wanted to take a quick break from the show just to tell you about our companies for a second. I'm Patrick Dichter and I own Appletree Business Services. We do quality accounting and tax nationwide. So if you're running a business or looking to buy a business, we'd love to help you out with accounting and tax services. You can find us at appletreebusiness.com. And Clint, tell us about Bison Business.
Yeah, Bison Business is my firm. We do nationwide M&A. So we help people buy and sell companies. Most of our customers have companies in the 1 to 20 million revenue range, profitable businesses. So if you've got one and you're ready to get acquired, you can reach out to us at bisonbusiness.com for a complimentary valuation, and we can get you to market and get you sold. If you're a listener that's a buyer that wants to buy a company that size, make sure you're on our email list because we'll send you out deals first before they hit the market anywhere else. But we'd love to serve you anytime you're thinking of acquiring or selling your business. We want to be your first stop at Bison Business.
Awesome. Now back to the show.
So you're making a great income. You don't have much debt. I've always been curious, how does a guy that owns a wealth management and CPA firm, how do you invest? Like what are you doing? Because one of the things I like to get into on this show is kind of your overall wealth strategy.
Mm-hmm.
So it sounds like you're doing acquisitions and kind of growing that way. Is that kind of your main big ticket investment that you're looking at right now, or are you into real estate, or like what's your kind of primary ways that you're diversifying or building wealth out of the income stream that you're generating with your firm?
Yeah. I mean, it's almost all plowing it back into the firm. We've talked about, we had one small real estate partnership that we invested in, and frankly, it was average and we got our money back. It wasn't really a home run by any means. We get clients, that come to us with deals all the time. And, but every dollar I can plow back into growth or getting the right talent in the firm, I get a better return on that money. Right. So I can go hire another tax strategist. Like if I had say $200,000 to spend, right, I could go hire a tax strategist that would return, a 30 to 40% multiple on that, or return, I guess, not multiple, but I could get a higher return of investment there, almost not guaranteed, but close to guaranteed, versus what I would get from any real estate that I'm not controlling. So, I mean, if I fast forwarded 5 years and, I think I'm still plowing money into the firm at this point as an investment than just trying to diversify too much.
Yeah. Take us 3 to 5 years into the future. You had this sharp growth rate the last few years that's kind of somewhat plateaued with that accordion effect you described. And where are you anticipating kind of revenue being in a few years from now? And what's your primary drivers there? Is it more acquisitions, or you have plans for organic growth, or what do you think the future holds for you?
I think it's going to be more organic growth. would like our number to be closer to 5 for 25 has kind of been our little tagline a little bit. That may be a little bit aggressive, but it'll be mostly organic growth, and then it would be mostly from growing the wealth management practice, and then adding choice accounting clients on the CPA side. The conversation I had with another colleague yesterday revolved around growth and how you approach growth. And I think he actually said that I may be too conservative by thinking that, right? He's like, well, why wouldn't you want to go to 10 instead of 5? And then if you get to 7, you're ahead of where you would have been, right? It's easier to 10x your growth than to 2x your growth. And I kind of had and that's obviously, we can do the math. That's not even 10x, right?
There's a book like that I just read.
Yeah. It's written by Dan Sullivan.
My dad's 10x is easier than 2x.
Yeah. Dan Sullivan has been a big proponent of that. And he's right, because your mindset changes at that point to a higher, to building it outside of how you're going to do it and versus who's going to help you do that. And so I think, but I mean, the conservative accountant in me is like, oh, no. I just want to have something manageable. We don't see any acquisition as, on the horizon right now. I think, once again, if the right firm,
so it's the guy who's done 6 acquisitions. Yeah.
Yeah. We've done 6. You got to remember, I've got a CFO who, shares a house with me and hates debt, hates change, really wants to have a nice, simple lifestyle. Her parents were both teachers and her dad surfs. So, she likes that lifestyle. And so we kind of keep each other, I think, in check that way. And that's what helps. But, but it would have to be a ideal strategic combination.
Yeah. So when I was first looking at acquiring accounting firms, there was a guy who had bought 2 or 3, and he was trying to sell wealth management, cross-sell it. He told me, I'll never forget, he said, a lot of wealth management firms will make $4 for every $1 of accounting services, like once they roll it and farm it. I haven't heard that from anyone else, but he basically explained like the income grows, as people's assets grow and like they keep contributing more to their accounts. And if you have an AUM model, right now you guys have 10% of revenue there. Do you see that just as you hang on and hold it, that side of the business grows easily and you don't have like the incremental cost to service it? Or
oh yeah,
I don't know if you think that guy's crazy to think 4 to 1 once you really maximize it. But
yeah, we had especially if it's a pure AUM model, or really where they game it is if they're more sales oriented, they sell annuities or insurance. But we, even from an AUM model, we've got a client, we've got a couple clients over 5 million of AUM, and our fee structure would be closer to, they're paying us, 0.6% on that. So it's about $30,000. That $30,000 of revenue, we spend, a fraction of the time that we would to get $30,000 of CPA services. And it's not that we're not doing enough. It's just people value those services more and they're a little bit more measurable. And, so I think that's where the industry as a whole has been, from wealth management, has been able to benefit from that, is the amount of effort you have to put in for the amount of revenue is much less. Yeah. And that goes back to my comment about the EBITDA difference. Like when people look at multiples on revenue for a CPA practice selling at say 1.2 versus a wealth management that's closer to 2.5 or 3 times revenue, it may sound like, oh, that wealth management selling for way more as a multiple. But when you peel back their EBITDA, the EBITDA is so much higher on that same amount of revenue in a wealth management than a CPA firm, that those numbers actually are much closer. In fact, some of the CPA firms may sell for a higher EBITDA than wealth management.
Interesting. Yeah, I've heard normally that the multiple is higher on the wealth management side.
Yeah.
And how many people do that work or are licensed?
In our firm, we have 2 of us are licensed, myself, and then one of our managers. He's the same as me, a CPA, and then he's also, he's passed his CFP exam. I think we're waiting for the certificate to show up now. But he's also state registered like I am as well, and has the Series 65.
Got it.
And yeah, so we have 2 advisors, and then we have, our admin staff also helps. So we'll have an operations person, marketing, and our CFO.
Do you market it much, or is it kind of like as those referrals come up on the tax side, you throw the intros over to the financial advisors?
We drip market it to internally. We don't really market it externally, except, we've got a couple law firms that we talk with regularly, and we remind them when we're doing estate planning that we also do wealth management. So we've received some referrals there, but we don't really do much active external marketing or leads or lead generation, anything like that at this point. But internally, we didn't do as much of it the first 5 years, but these last 5 years, we've been more proactive about asking the right questions and talking to clients about it. And it's easy from a CPA perspective. It's very easy to do because, they don't look at us as trying to sell something to them or do the financial. Like if I was just a financial advisor calling on them, they would be a lot more standoffish than, oh, you're the CPA. Like, hey, I'm having this issue. We're already there, a trusted advisor. It's kind of a natural add-on.
So for a potential acquirer, do they need to hold those licenses as well if they want to buy the wealth management book?
Yeah, you're going to have to, the firm, if you're taking on that wealth management work, you're going to have to register. You'd have to have that. And then you would have to register under your own RIA, or you'd have to go under somebody else's RIA or a broker dealer. We set up our own RIA in beginning of 23. But we were under another RIA that we operated out of.
Got it. So it kind of has to be a unique buyer or a group that has those licenses.
Yeah. You can't just show up as a CPA firm and say, hey, we're going to start doing wealth management. The state, at a minimum, you have to register with the state, depending on size, for the SEC.
Other question I'd love your perspective on. Which industry do you think is going to have better margins for the next 20 years? When you have technology and AI, do you think the accounting work is going to hold better margins, or the wealth management side?
Well, wealth management is so far ahead in terms of margin already that even if they, if CPA improves a little bit and the wealth management, use the term normalizes maybe a little bit, I think they're still going to be ahead. And I think it's just because the public perceives the value of it higher, and it's where they anchor the perceived value off of. As long as accountants and tax preparers offer services at a low rate and compete with each other on being the cheapest, they're going to continue to suppress the margins. And wealth management is just, frankly, the 1%, when, back in the 80s or whenever they started convincing people to pay 1% to manage investments, that was such a high amount that it's frankly, it's where it stands. And so you're anchoring off a high amount. It's kind of similar to how people will value and pay for an attorney more than they'll pay for a CPA.
Right. Just that perceived value is really high.
Craig, I'd like to get back to the,
you want to buy the firm still, don't you?
I do. No, I want to sell it really, but
there you go.
What I want to get to is, it sounds like I'm kind of reading between the lines from some of the answers that you gave. You said that, hey, show up with an 8-figure number, and you said, hey, 4 isn't enough to retire on and have to do something else. Do you think of your firm as kind of like, this is a vehicle I'm driving, it's getting me to a destination? And I'm thinking of my own financial plan now of, I've got my number, and once I can get my magic number, I might be game. Is that kind of how you're thinking? You're just kind of like organically growing this, investing, building your wealth, enjoying your working with your wife and enjoying your clients and your golf game and all that. But there's a finish line somewhere. Is that how you're thinking of it?
Yeah. And, surprisingly, I think my finish line is closer than people may, think. Cause it's funny. I have clients in their mid 60s and I'm thinking, I don't know if I want to be, I think if we fast forward 10 years from now, I don't know if I want to be, it's not that I don't want to be part of it, but I'd really like to have it transitioned out by then. I look at then there's enough things I'd want to be doing personally to, enjoy life and just pay things forward going forward. I'd probably be more like a chairman of the board type of role inside the firm and then help be that type of advisor outside to other businesses at that point. But yeah, I don't have this. I'm definitely don't have a detailed, like, okay, if I can keep growing this and we hit 8 million in revenue and somebody shows up with 10 million of cash, then I'm ready to go. I think my comment probably was a little more around, hey, listen, if you want to just completely pay me, double what this is worth, I mean, you'd be stupid not to, right? Like, even if, I've got a client, he owns a fairly decent sized office building in town. Somebody offered him, I mean, the thing was valued at like 52 million a few years ago, and somebody offered him like 120 million, right? And the comment was like, well, I mean, come on. Like, and it goes back to, I mean, you can value that off. You look at public companies and what they've been selling for as a multiple, right? I mean, at some point, a year and a half ago, if somebody would have said, hey, I'll pay you $1,000 for your NVIDIA stock, you'd be like, sold. It's worth 400. Now it's like 1,000. I don't know if I'd sell it for 1,000. So I don't have that, like, okay, here's the thing. But if somebody shows up and wants to pay me double what it's technically worth today, yeah. I mean, there's a point where the number becomes like, okay, this doesn't make sense to say no.
Okay, so let's throw out no one shows up to pay you double what it's worth.
Yeah.
If your plan is more realistic, which is, I'm going to sell it for kind of market value someday, because a lot of sellers think that, but there's some point where they're ready to sell for what it's actually worth.
Exactly.
And so what would be that triggering moment for you to say, hey, I'm no longer needing 2x what it's worth to sell right now. I'm ready to take 1x what it's worth. Where do you think you cross that Rubicon in your life?
I think it definitely starts becoming more realistic at age 55, given my idea for what, my, financial independence life would look like at that point. Because there is a point mathematically where, now I have essentially, hopefully 40 to 50 years of lifespan. So I need more to sustain 40 to 50 years than I would at 35 to 45 years. And that number, that just, it starts crossing there a little bit. Definitely by age 60, if we keep on a modest growth of where we are, that starts making more sense to sell. So I think it's probably more age-based for me than, I don't have any need to sell. I mean, I haven't worked a Saturday or a Sunday at all since 2022. Not one. And to the point where somebody asked me something once on a Saturday, and I kind of had that hesitation, like, this doesn't really count if I talk to them, right? Like, I didn't work today. I've been very proactive about that. And so I'm not working long hours. I'm not working weekends. I'm not doing some of the things that others would be doing in this role. So I think it's a little bit more, why would I change? I don't have any reason to do something different at this point.
Super cool. It's cool to hear how your mind thinks. You kind of break it down to a math problem a little bit, but also it's a lifestyle thing. It sounds like you've got some other kind of philanthropic and ways you could give back and be kind of paying it forward, like you said. And this would allow you to turn a new chapter, and do something that you're more of a passion play with your time. And so that's cool, man. I like that you're kind of balancing those personal reasons with the math of the lifespan and everything else. And it's neat to see how someone that advises so many others thinks about it for themselves.
I think that, it's odd. It makes me unique, I think, in a way for our clients to have somebody that maybe thinks a little more scatterbrained like entrepreneurs do versus an accountant thinking like it. And, I think that definitely helps, but at the same time, it's just kind of who I am. Right. And so I'm not trying to do something completely different, but I'm trying to take advantage of the fact that, if you asked me to go sit in an audit room and audit financial statements for, like I used to at Arthur Andersen, I'd just go nuts. And this goes back to your comment. If somebody showed up, bought us, and then I stayed on and worked for them, I think I'd be completely miserable because I'd have to deal with probably right now. I get to control how and where we go strategy wise and growth wise. If I wasn't in some of that control, I think I would get like, well, why are we doing this? This doesn't make any sense.
Gotcha. I think that kind of wraps it up for me. That puts a bow on it pretty well in terms of just kind of understanding where you're at today and what your thought process is like on the exit. I didn't ask about like the family situation. You have kids, you got kids in school, out of school, or where are they at?
I've got a daughter who's a sophomore in college and another daughter who's a junior in high school. So 2 teenage daughters, 3 women in the house. We had to get a boy dog just to kind of even it out a little bit. But yeah, I mean, and that, honestly, that also factors into when you're talking to clients about kind of where they are fitting wise. When I'm looking at that 55 number, Cammie's going to be graduating from college then. So that also is a little bit more like I may have 2 of them off the payroll by then. So that changes my perspective as well versus looking at another 5 to 6 years of paying for schools and stuff.
Yeah, that stretches out the nest egg a lot more.
Right.
Okay. Very cool. Patrick, what else you got, man?
Awesome, man. I think it's just inspiring to see that you can run a firm like that. I think there's a lot of people in the tax world that are working their tails off and not making as much money as they could and grinding their staff to the bone. And I know your staff doesn't do that and you take great care of them. So I think it's just a great example. And I'll be excited to see where you go in the next few years and be curious to see what ends up happening.
Well, frankly, I look at you, right, and what you're doing. I mean, you and I are in a very similar boat. I just happen to be a CPA. But, you and I think, approach it very similarly. Whereas, if we're not trying to do the work or you just don't do the work because your background's different, it's like, this is a business. This is something, at the end of the day, this is something we have people, we have teams, we have clients and, customers that rely on us. And how can we build something that brings a happy team and a happy client to the situation? And if we're not doing that, then what's the purpose? Like nobody wakes up, no business owner wakes up in January 1st and puts on, one of their goals list, I can't wait to file my tax return this year. Right.
It's a win-win. Yeah. Serve the client, serve your team, and make a great living. So awesome, man. If people want to connect with you online or reach out to you, where's the best place to do that?
I'm on Twitter. I'm not on a lot of the other things, Instagram and TikTok and all that, but at CPA Tax Team is my Twitter handle. And then, our website is www.cpataxteam.com. So, yeah. And then, frankly, anybody likes to play golf or eat well in Dallas, let me know.
Awesome, man. Well, we'll link to that in the show notes and we appreciate you coming on.
Thank you. Appreciate it.
See ya.